Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 3rd. Michael Boutros here with you this morning. Michael, D, Rich, Vesk, Ziad, great to see everyone here in the room. So welcome to Super Thursday. I'm sure if you've been paying attention to any of the sterling crosses, we've been getting some extreme amounts of volatility here on the BOE, interest rate decision. Obviously, we got the quarterly inflation numbers, which were very interesting, showing a real upsurge in expectations for inflation out of the UK. We discussed this here in the webinar yesterday. I tried to put it in the report last night. You know, the expectations were that we were going to see the projections for inflation upticked for sure on the account of the strong depreciation, or the rapid, I should say, depreciation that we've been seeing in the pound. Now, that did translate into their forecasts. We'll go over that in a moment from the BOE. We'll touch base on the sterling dollar, sterling yen. I do want to take a segue and cover the Kiwi crosses that we went over earlier in the week, Kiwi dollar, Kiwi yen. Dollar yen obviously coming in some support, that major support target that we talked about earlier in the week. We will touch on Aussie dollar. We got the RBA monetary policy report that's on tap later tonight. That's a quarterly report, guys, so may in fact shake some things up for the Aussie and Aussie yen. And then we'll go over the dollar crosses. Tomorrow is, the week's not over. Tomorrow is still non-farm payroll Friday, and we still got some fireworks to go. So that's what's slated for today's webinar. If you guys have any questions or specific trade setups you want to review, as always, please feel free to throw them on the message board. Conwall, if you're in the room, I got you on the commodities. No worries on that. Mike is short Kiwi yen just now. RSI divergence in the 4-hour. Just wondering what you thought. I guess I can take a quick segue for you. Hold on one sec. Yeah, look, 75.51 is the level still, and that's still bearish invalidation, Mike. So anything that you take, just keep in mind, if we pop through that, even on the open here, you're likely to see this thing run into the 76 handle. I do see the divergence that you're talking about. It's not the most convincing. There's no divergence on the 2-hour here. Okay, slight divergence on the 4-hour. You need to see this candle close. So as of now, there is actually no divergence here. Remember, Mike, when we're trying to ascertain divergence, you have to have the close, right? It's all about the closes. So until this candle closes, these wicks don't mean anything. So in fact, there's no divergence here just yet. The divergence signal was here, but that could have played out with this drop. So just keep that in mind. My stop on this, Mike, would be above 75.52. If we break that, that's the high day close from last month. It's the high day reversal close from last month, and would certainly, in my mind, at least validate a little bit more of a near-term breakout. Got it? He says done, nice and close. Okay, yeah. No, it's a tight trade. I do like it. Just when you're ascertaining divergence, it's really important that we talk about. It's really all about the closes, right? It's not about the wicks. And the divergent signal, these oscillators, every oscillator for that matter, Mike, whether it's ATR, RSI, stochastics, this only gets pegged once the candle closes. So as long as that candle is open, it could move up, it could move down, it could look like divergence, it could really mess with your head. So just keep that in mind. A lot of times it's better, Mike, just to bring it into the tighter time frames. You'll get those candle closes more often, and you might be able to identify that divergence a little bit clearer on like a 30-minute or an hourly chart. All right? Okay, so let's go back to the process here. Yeah, you're more than welcome, Mike. Let's go over real quick the dollar indices, where we stand here ahead of non-farm payrolls tomorrow, and then we'll go over yesterday's update and the subsequent dollar crosses. So I gave you an update on both indices here last night as well. Here's what the DXY looks like, the ICE dollar index. The level that we talked about yesterday, guys, if you didn't remember, 97.23 to 97.26. Now, we did probe below that yesterday and again here today, but that's the level to beat on a closed basis to get this thing going. Again, I'll remind you, it's the 618 retracement of the decline off the December highs, and it's the former July high day reversal close. So we saw that, and we talked about that here in the webinar yesterday. You kind of probed just below it, overnight trade. You kind of probed again, but we're going to stick around this for a while. You might see some sideways consolidation. Again, you still have non-farm payrolls on tap tomorrow. Might prompt a nice little near-term rally to give us another opportunity to get in here, but you want to stay bearish below this median line, okay, on the daily chart. And that basically takes you into like 97, let's just call it 98 handle. So as long as we stay below 98, I'm still going to favor the short side. The only thing that would shift or invalidate the bias would be a break above the monthly open. That's all the way up here at 98.39. So still looking lower, could see a near-term possibility for a rebound here in the dollar index heading into the U.S. Open. You're looking to stay or maintain a broader bearish bias below the monthly open. The Dow Jones FXCM dollar index is doing something a little different in that it's breaking that near-term support that we discussed yesterday. So here's the Dow Jones FXCM dollar index. We talked about 12,102, 12,108. That is the basic 236 retracement of the advance off that low that you made on the back of Brexit here. You also have the high day close, very similar to the ICE dollar index from July. Here, we're showing a little bit more of a thrust to the downside and a break. And I also wanted to highlight this. Remember that support trigger we were looking at the ICE dollar index, which broke? Looks like we're getting a little bit of a delayed reaction, but here's the Dow Jones FXCM dollar index also looking for a break. So if we close below 12,100 today and we do see momentum close below that support trigger from earlier in the year, that would be a further conviction near term of a continued move lower targeting 12,026 and key support confluence into this region right here. You have the 100-day moving average, the 200-day moving average, slope support, and this formation which I added yesterday. We don't have any conviction on this yet, this pitchfork, but if it is in play, the median line here converges on that key confluence region right around 12,000. So that's sort of what I'm thinking about right now. Again, near-term resistance, I'd be looking initially at the yearly open, bullish invalidation, or bearish invalidation, excuse me. Want to stay bearish below that swing low from last week. That would converge also on former slope support, now resistance. And really, we shouldn't see a rally surpassing this region if we have, in fact, put in a little bit more of a concrete high. Notice that the momentum signature that we were talking about also has really strong divergence. So Mike, here's a perfect example of a much more conviction divergent signal. Whenever you're trying to identify, a nice trick is always bring it into a line chart. This will show you just the closes of each candle so you don't get faked out with those wicks. And this is a much easier way to identify it. Price action making a higher high, the oscillator making a lower high. And as I always often note, when one of the reference points is above the extreme, above 70, and one of the reference points of the divergence is below, that's typically a strong signal. Same thing on the downside. When one of the reference signals on a bullish divergence signal is sub 30 and the other one is above, those typically will be decent signals too. All right, so the onset here is starting to look pretty good. We've been looking for this dollar turnaround. If you click on the link here from the previous update on the dollar indices that we made back earlier in the month on the 26th, you can see we were talking about this key region of resistance both on the dollar index and on the Dow Jones FXCM dollar index. Inevitably, both those levels, after a couple of days of struggle there, did give us that high that we were looking for. So a nice welcome turnaround here in the dollar indices. Any questions on the FXCM dollar index or the ICE dollar index? Again, nice way to be able to gauge what the dollar is doing here, even if you can't trade it here stateside. What do you think of using pitchforks with a line chart? Okay, Mike saying, what do you think about using I think you're just saying, what about using pitchforks with a line chart for a closed basis? Look, you got to decide what kind of analysis that we want to do, Mike. So I can tell you this. If I'm looking at a chart, monthly chart, weekly chart, I'm looking for longer term prospects. I'm looking for an investment type of trade, a buy and hold type of positioning, a broader macroeconomic view on the markets. Sure. The closes are what matters. Guys who are trading for a longer term horizons, they're not really worried or shaken out by intraday positioning. So there's merits in that. Would I do that personally, Mike? No. I tend to trade with a lot more leverage. We're in a market condition right now where you're getting a lot more volatility, and to just stress the close in this kind of environment, if you're intraday trading, I mean, unless you're working with like 300 pip stops, Mike, but on an intraday basis, you can get days like this, days like this, days like this, where you just get massacred, right? So not my kind of analysis, Mike. There's merits, there's a million and one ways to trade. But for me, that's not something that'll fancy my type of trading very well. Does that make sense, Mike? Yeah, I mean, the candle gives you so much more information. He says it's much more accurate to use the candles. I wouldn't even use it as accuracy. I just would use it as the more information I have to make my decision, the better. And the candle tells you where the market opened, where the market closed, where the market high, where the market low was. So you get a much better picture of what's happening in price action for sure. All right, good questions, Mike. All right, so let's move on. That was the ICE dollar index number 1 and the Dow Jones FXCM dollar index number 2. Let's jump into some of the gushy and gory stuff that we got from the BOE. So moving into the sterling crosses, here's what British pound looked like yesterday. I highlighted that we were still looking to stay constructive while above the weekly open here in the sterling. And really the major key resistance barrier that you need to get through is the 2016 low day close previous to where we are now, and that came in at 24.33. So big region of resistance. The pound yen setup, which I'll show you in a moment, was another setup that was more at risk for a pound drop off. Now we're seeing that rally too, and I'll go over that in a moment. But first things first, with the British pound, here's what sterling looks like first on the daily chart, and then let's bring up some commentary here from the BOE. So just to highlight some of the major takeaways that we got from the BOE this morning, you can see the sort of headlines that the markets ran with here on the terminal. With policy can respond in either direction to the outlook change. So again, the BOE and the MPC suggesting that they have room to tighten, they have room to cut. But the most important takeaway is this, in my humble opinion. The BOE says the MPC has limited tolerance for above target inflation. The inflation target is 2%. Today's forecasts, the brand new quarterly inflation forecasts from the BOE, saw the expectation for 2017 inflation upwardly revised from 2%, which is the target, to 2.7. Okay? The 2018 inflation target was upwardly revised from 2.4% to 2.7%. So basically, you got a scenario where the inflationary forecasts have been upgraded, and at the same time, you see the MPC saying that we have very little tolerance for above target inflation. Obviously, the depreciation that we've seen in the sterling has really fueled that inflation. But what does that mean for monetary policy? Well, it means a couple of things. A, you're not going to really be expecting any major new demand for easing measures, right? These are only going to further exacerbate the inflationary picture. And if they are really concerned about inflation starting to run above target, their hands are kind of tied with how much easing they can further implement, or even if they can kind of continue the course here. And with the same respect, it also means that if anything, as far as the interest rate outlook, this is going to bump it higher. So it's a very interesting dynamic that you got with regards to the commentary here today. Keep in mind that McCafferty also opposed QE but didn't vote against it today. So another thing that kind of ran with me, wasn't really a highlighted commentary here, but that does suggest, again, that they're kind of between a rock and a hard place right now. And further easing is not going to really be something that's on the books for market expectations where we are now. The British pound on the daily chart, didn't even include it in the report yesterday. It's still pretty ugly here, guys, and I don't really want to stress this. We want to know where we are in trend, but certainly the only thing I'm sort of looking at is basic trendline resistance off the highs that we made last month. Comes in a little bit higher here from where we are, right around 125.50, 125.60. I'll show you the near-term chart in a moment, but if we extrapolate this trend line off the lows, you sort of come into a region of resistance there as well. Okay, the setup from last night looked like this. Okay, and this is really what the focus was. So the near-term advance off the lows did take shape within the confines of this ascending median line formation and acted really nice at last week's, or I guess this is not last week's, but this was the October 18th high and confluence with the median line right off the lows here. So that's where we kind of were. Let me bring this into a 1 hour, give you a little better of a picture of near-term price action. Here's a 2 hour. So that's sort of where we were heading into the interest rate or heading into today's trade session. Obviously, the BOE charging this massive break running right into 24, 24.33 being the near-term sort of bearish invalidation level for the broader descending structure. And that's now support, initial support. So look for this stretch. You have a little bit higher to go before you run into the upper parallel right here. That gives you a range somewhere around 25, like I said, just on this stretch here. 25.50 comes in a little bit later in time, so I don't know if we'll actually get that on this stretch here immediately. 25.50, 25.60 does start to look a little bit more of that further trendline resistance that you see up here. But long story short, what's the game plan from here? Well, heading into the U.S. trade session, again, if we see a pullback towards 24, I'd be looking for possible entries. The only thing that would shift my focus to the downside, at least near term, I wouldn't even say I'd want to get short, but what would make me want to not be long would be a break below this region here. Basically the swing high that we made, the median line, we'll go ahead and scratch that for now. So that's sort of the initial targets I'd be looking at right now for the British pound. We're going to go ahead and raise that bullish invalidation from last night's level at 121.85. You're really going to want to raise that basically to the monthly open right here, 24.20 into the, 22.40 into 22. Sort of a nice little region of support. That's what would be my broader bullish invalidation level. If we break that, you'll likely see a bigger spill here in the pound. But that being said, look for a pullback here for possible long entries, targeting the upper parallel, targeting broader structural resistance here, just to bring things in view. Okay, here's the pound. Is that median line? And a basic 38.2 takes into 126. So the levels look pretty decent. Watch that structural resistance here heading to the U.S. trade session. You want to stay constructive above 23.50. Questions on pound dollar? Again, feel free to take a snapshot of the chart here, guys, for future reference if you need it. Still going to be a player for tomorrow. Non-farm payrolls, dollar cross. Okay, so would you think it's okay to buy near 124? If we get a dip into 124, I'd be looking for long triggers, Wes. 23.50 would be sort of the ideal snap. I don't think we'll get quite all the way down there. That would require essentially a cap of the entire advance that we got on the MPC today. But 24 is the initial area of support I'd start to look for. Yeah, my only concern on the pound, guys, is dollar exhaustion at this point, more so than necessarily a pound pullback. He says, okay, I shorted for now. Yeah, Wes, if you're playing sort of a near-term scalp against this initial run, 24 is, yeah, definitely, look, it's a bigger ATR at this point. So just keep in mind, a quarter of the daily ATR, let me bring it up for you. A quarter of the daily ATR is bringing about 28 pips. So from a scalping intraday trading standpoint, after 28 pip rally off the highs, not necessarily your entry, I'd be looking to do something, bring your stops to break even, because keep in mind, you're taking a counter trend position right now. Okay, and when we play those, we always want to be a little bit more nimble. All right, hope that helps, Wes. Right on. Okay, yeah. 124.33 is what he's looking for as an initial target. I like it. Hey, Davin, are you in the room? I saw a tweet from him yesterday asking for a little bit more information on risk management because he's getting a little bit stopped out more often on these positions that end up being profitable, but then they get stopped out. Guys, if you ever have questions like that on risk or on specific risk tolerance, feel free. This is a forum. I want to leave it open for your benefit. So in this trading environment, the one thing I do want to say, guys, is I've been very quick to bring my stops to break even. I'm not going to lie. I've taken maybe 6, 7 break even stops just this week. And that's okay, okay? It's early in the week. It's early in the month. The opening ranges are just taking shape. On an intraday basis, I got no problem getting stopped out at break even. But you got to have skin in the game, okay? Not the level or not the environment where you want to start taking a much more abrupt position for a larger play. You're just opening up the month. You have major event risk all throughout this week, still culminating tomorrow with the non-farm payroll print. So in these environments, it's really important to know when is the time to press a trade and when's the time to play it a little bit closer to the chest. And, throughout the course of this week, I've been trying to give you guys a little bit of a, cautionary note on that. But anyway, hope that helps. Let me know if anyone has any specific questions on that. If there are no other questions here on the pound, let's jump into pound dollar. So pound was number 3. Here's sterling yen, number 4. By the way, Mike, just another review here. I'm just going to keep hammering this in, try to help you out. But this is another example, Mike, of where you're getting some divergence that I would be cautious of. So I know Wes is holding a short off this, and there is divergence, but this is just something that you always want to pay attention to. Divergence that happens above the extremes, above 70 or below 30, aren't going to be your strongest signals, right? It's important to note when they're there, and certainly it suggests the same type of momentum exhaustion, but when both reference points are above 70, tend to be weaker signals. In fact, if you go back in price action, the closer those divergent signals are to 50, actually tend to be stronger waning momentum signatures. But this is an example where the candles are closed and you're getting a little bit more readily identifiable near-term divergence. All right. Yep, I always keep you hearing saying that. That is better within the limits. You got it. All right, Wes, looking good. And that's pound dollar. Here's what pound yen looks like from last night. Pound yen, where art thou? Here we go. And here's what we look like last night. So for the pound yen, the major focus for me heading into the release this morning was on this 126.90 level. Now, it was messy. You did get a break and a really quick recovery. But what we were saying is for a sterling weaker story, if this high that we made early in the week, and the only reason that that was a significant high, guys, is because of where we came off on the daily chart. And I showed you this in the webinar yesterday. Okay, here's the pound yen daily. The 2016 low day close, or excuse me, the swing low that's labeled incorrectly from July. Was right at 128.60. Okay, you could see basic trendline resistance off the highs from September. We broke through that, kind of sat on it as support, and look at the rejection on that reversal day we made on what was that, Monday. So if this was going to be a more concrete high, and this sort of recovery off of basic slope support was running its course, the rally today should have suppressed or stayed below the monthly open. Now that we're getting through that, okay, I do think you want to continue just to focus on this slope to the upside that we've been working with off the lows from last month. No plays here on pound yen. As I said, this is a trickier trade in the report yesterday to get on just because of the sheer vast ATR that you get on these kinds of moves. Pound yen tends to be a lot more volatile. Long story short, we're now making it through that bearish near-term invalidation level, and as long as we hold above that at this point, you want to be cautious for further gains here in pound yen. I'm not going to lie, I'm falling out of favor here with pound yen just because of what's happening in the yen in and of itself. And if the yen starts to catch a bid on risk off, obviously you've seen some pretty abrupt turnovers in risk markets, it might limit the upside. So while the pound might experience further advances, pound yen might kind of lag behind. So that's why I'm kind of not really focused on this right now. But long story short, let's go ahead and update some of these levels. I'm going to go ahead and get rid of these for now. Okay, and I want to highlight for resistance targets here and here. So what you're looking at 129.57 is essentially an older dated 1618 extension from the decline off the high. Not a major fib at this point that I want to stress, but comes right in line with those lows that we made there in September. Okay, and it comes right in line with the upper median line parallel over the next few days. Above that, okay, you have 130.70, and that's, I think, a little bit more of a critical level. It's just two equal legs off the advance from the low that you made on the 11th of October. So one leg up, boom, two equal legs would take you into 130.77. That's also last month's open. So the levels for the upside stay constructive above this week's open, which is basically right here, 127.10. Looking to buy pullbacks while above this region. Ideally, a move back into this sliding parallel would be sort of an ideal move. This is the 1618 of the range. So sort of a boom, boom type deal. But essentially, you're looking for that stretch into 129.57 and 130.70. Questions on pound yen? Caution here, guys. Caution. I was really sort of all over this yesterday. I even highlighted this setup on Daily FX. I was getting really excited on the fact that, look, pound dollar looks like it's in a nice ascending channel formation at resistance. Pound yen looks like it's a nice ascending channel formation at support. They were exact opposites from where they were positioned ahead of the release. So obviously the pound dollar was the one to go with here after the false break below 126.90. Really recovered pretty quickly. So look for pullbacks here. Stay constructive above the weekly open, targeting 129.57. That was pound yen. Number 4. Any questions on sterling yen? Sure. Mike saying yen could get stronger due to elections. That's going to be the biggest sort of play next week, guys. I am not an advocate of using the election in any which way whatsoever to base a bias, position, or trade. Just going to put that out right now. We do need to know what's going on with the election. We do need to watch price action very closely. I do not want to plan around it. And heading into that, guys, we're going to be focused on what we always are, price action. But yes, that event risk is likely to charge some volatility heading into next week, and especially with the risk-sensitive pairs, Aussie Yen, dollar, definitely something to pay attention to. You know what, Graham? I will say the peso is its own animal. He's saying, oh, come on, Mike, no punt on the Mexican wall stocks. Yeah, the peso has been radical with Trump news and overall election stuff, right? But I'm not going to lie to you, I'm not really a peso trader very often, so something to take a look at, though. All right, let's move on. Kiwi dollar, I see some questions here. You're holding some positions, Conwall, in crude. Okay, let's take a quick segue here for the commodities here, since we're in a position for Conwall. So I'm going to come back to the Kiwi crosses in just a moment, but we'll go over crude. That'll be number 5. And silver, is that what you want, Conwall? Number 6, and might as well cover gold, number 7. Okay, here's what crude looks like real quick. You know, the rebound now, I still think has a little bit more to go. 46.34, 46.22 would be the area of resistance you'd be looking for. Remember the levels we highlighted, Conwall, yesterday. No change, man. In fact, the 1618 was a real nice solid rock form of support right here. That's the 1618 extension from the decline off the highs that we made, 145.09. Let me see, you had a previous question here. Conwall, hello, good sir. Still short in crude, and you're long in silver. Yesterday, your warning for a spike high in crude helped me. Thank you. You're more than welcome, Conwall. Nice job on the commodities, man. So listen, if you're still holding a short, I'm not sure where your position is from, if you want to give me some more information. Okay, oh, here it is. You're short from 46.26. Okay, that's from yesterday, right? Also, please give stop loss for both trades along with the target. So, Conwall, I can just tell you where I would be looking, man. I can't tell you exactly what to do, right? To be honest with you, I would have taken something off at 45. I hope you shook off a little bit of that position. 45, like I said, that 1618 could offer a little bit more of a near-term bounce. Also want to take into account you made some divergence here, price action making a much steeper low, the oscillator making a higher low. Mike, perfect example of weak divergence, but divergence nonetheless. Both reference points are below 30. Not a strong signal, but a signal nonetheless. Near-term resistance, you're still looking at former support, that level we were talking about yesterday at 46.22, 46.34. Your entries at 46.20. Look, as far as the trade that you're in right now, Conwall, if you're asking me, Michael Boutros, with a gun to my head, I'd have my stop at break even. Because if it gets through 46.30, I do think you can run into 47.30, and then that's just risking, taking a spill on that trade for no reason. Near-term targets as far as support, no change from yesterday, 45.09. Even if we get there again, I'd be looking to take something off. The bigger target to the downside would be just above 44. You have the 618 retracement of the entire advance off the lows that you made for August. And you also have some nice swing lows here in pivot and price. So this is sort of the next downside target I'd be looking for in crude. Watch for exhaustion. It's been a pretty big spill off the highs here, Conwall. So as long as you stay below this region of resistance, I still do like the short. Oh, my man. Awesome. He says already took a little bit off. Great. Great. Yeah, so if you're playing it and you're already in the money and you're playing with the house's money at this point, that's my ideal condition. So yeah, Conwall, stop. I'd have it at break even. If you want to give yourself a little bit of breathing room, have it just above that 100-day moving average, which was exactly yesterday's high that you see here in blue. But, essentially, that's going to be my near-term resistance still. Does that make sense, Conwall? On crude, any questions specifically? Again, if you want to take a quick snapshot of this chart, it's the same levels that we looked at yesterday. Remember also, yesterday we added this slope. I'm not sure if I did it in the webinar, if I was doing it with my research at home, but this slope here, let me zoom out to a 4-hour, might be clearer to see. Off the highs from, what is that, June? Okay, the subsequent low that you made here in September, and then the high. The median line literally caught the high that you made here in early August and was converging on that spot that we talked about here in the webinar yesterday. So that just further validates, that's all to say, near term, this should be an area of resistance if crude is going to stay on a downward trajectory. All right, Conwell says, yes, sir, you got it. Val, we'll definitely take a look at gold as well. Silver first, though. Here's what silver looks like so far. So the breakout in silver failing a little bit more abruptly, just ahead of that resistance target that we discussed yesterday. That was basically the upper median line parallel, the 100-day moving average, stretched it into just below the 19 handle. Here's a reversal day here now, looking for a little bit more of a pullback. On this one, you want to look for support at 1785. Silver, you're long from 1811, Conwall. What was your target on that? I hope you took some off here at that target at 1843 yesterday as well that we were talking about in the webinar. Again, same thing on this. I would have a near-term bullish inval right here. The monthly open, the range highs for that breakout that we were looking for earlier last week. I wouldn't put your stop there now because you've been in that trade for a while, but those are the areas I'd start to look for some near-term support. Give me 1 second, Conwall. I don't know about this silver trade right now. Let me take a peek here. Okay. It actually doesn't look that bad as far as the pullback's concerned on near-term price action here. Conwall, this is what I would say, my man. Look, you're checking the former May high right now and that confluence support for that median line, okay, for the formation that we were following off the highs here. So look, on the near term, I do think you can catch some support right now. If it breaks this low, be prepared. Don't even worry about the monthly open. Be prepared for a run into this region. Okay, I don't want to necessarily stress the monthly open at this point because you haven't really seen a clear-cut rebound off that region. More so, it was that 1782 level. The weekly open comes in just below at 1775, and then you have basic slope support just off the lows here. If this is a channel, giving you like this region of support at this point. All right. But for your trade purposes, I would be wanting to see a hold against the swing low that we just made. Okay, especially on account of that near-term confluence support with that sliding parallel you see in blue. Makes sense? Expect some back and fill here. Expect some back and fill. You know, if you put a gun to my head, I do think that this thing dips lower into the U.S. Open, and you might get an opportunity to get a better long position. So, you know, just don't take too aggressive a stance on the counter trend trade here just yet. All right, yeah, you're more than welcome, Conwall. And gold for Val. Val, let me know if you're actually holding a position on this or if you just want a general, more sort of overview. Very similar picture to what you're seeing here in gold. But it looks like this. This one came off of a level yesterday that we talked about, which was really critical. And, you know, that was the difference between gold and silver. We said silver had a little bit more stretch to go. Gold was basically at resistance. And in fact, that resistance level did hold. Our bearish invalidation was 1302. That's the lows that we made here back in the month of September. It's also a 100% extension, so 2 equal legs down from the highs for the year. You also have the median line for that slope formation that held for a good 3 months before that break in early October, all converge right here. Okay. You also have, add to that, the actual swing concerted May high at 1303, 1302. So the fact that we're spiking into this and pulling back as momentum is spiking 60 and pulling back really gives a little bit more of a risk for a counter trend move or a near-term pullback, let's say, in gold. Again, if you look at this on the near term, a quick update here. Doesn't give you too much in the way of structural support just yet. But let me just stress this chart for you real quick, Val. Let me know if you have any specific questions here on gold, by the way. Okay, bear with me. This is going to be ugly. I just do want to see what this looks like real quick, if there's any merits. Very similar to what we were looking at in silver. Didn't quite make it. So you got a raised ceiling here. Turn right ahead of resistance. It's called a raised ceiling, and oftentimes will be a precursor to exhaustion in momentum. So for the gold trade, very similar to silver. Val, I do think that you can get a little bit deeper of a pullback here before it starts to rip higher again. Actually holding a long right now. So Val, where's the long from? Are you holding a long from earlier in the week? Or are you holding a long from intraday price action today? Because if you're holding it from intraday price action today, you need to see a break above 1296 again. That's not only that swing high, but that 100% extension, which has been a nice pivot so far over the last couple of days. So this is sort of the level to beat for you to continue to see sort of another run at 1303. I do think the risk is for a little bit more of a near-term setback from here. Okay, Val, so does that make sense? Watch that low. Let me just see if there's any type of resemblance of a relationship. Whoops. Just off near-term price. Oh, 1618 did catch the lows there. And you're going to want to see this momentum sort of signature clear as resistance as well to get the upside going. But note that this is the deepest cut into into momentum on the downside that you've gotten since the start of the week. Okay, so that change in behavior certainly is sometimes indicative of near-term exhaustion, Val. Moves into overbought, despite contrary belief, is actually very bullish. This means that the market has enough push. There's enough players behind it to get this oscillator into the overbought condition. But as we always like to say, when we're in really decent uptrends, we want to see support in RSI at 40. Okay, that suggests that you're seeing much more stronger momentum and the profile remains constructive. You want to see breaks above 60, breaks above 70. Here's your deepest cut below 40 in momentum and the first 40 break that you've seen since the start of the week. So certainly that might be a near-term exhaustion signal. I'd be looking for resistance just below 1300, 1296 here. An area of interest for more concrete support, to be quite honest with you, if you get a move all the way down near 1275, that'd be an area of interest. I think you'd see a little bit more of a concrete bounce. But keep your eye on that range for now between 1286 and 1296. Val, does that help? Does that make sense? I want to make sure we're on the same page there. Yes, thanks. All right. More than welcome. So that is crude, silver, and gold. Any questions on the com block right now? Risk is for a little bit more of a setback here before we move off, but no change to our levels from gold. Okay. Nicholas, hello. I joined the webinar late. Did you have a look at dollar Swiss? I haven't, and I don't think I'm going to unless we have time. Nick, I'm just messing with you. If we have time, we'll take a look at the end. The euro dollar is very interesting. I'm kind of just focused on that right now, but let's get through this. Next up on tap, I do want to take a look at Kiwi and some of the Kiwi updates that we've been following from earlier this week. I'll go back to the intraday charts here. Here's what Kiwi looked like as we were heading into the employment numbers that we got. We went over the results of this yesterday. And the breakout has continued to take out those subsequent topside targets. We haven't gotten to 73.40 yet, which is the next subsequent level I'm looking for. But to put things in perspective here, guys, this was a huge break, and 72.18 was our bearish invalidation level. Once that gave way, you're looking for the monthly open from last month. Huge resistance here near term at 73, which we're probing through right now. 73.40 being two equal legs off the low comes in just higher. Okay, what can I say about Kiwi? Near term, here's what it looks like. You've been getting some surmounting divergence here into the highs. Another example, it's a weak signal above 70, but nonetheless, price action, fresh high, oscillator, lower high. And I'm basically looking for some near-term exhaustion here to get us a larger setback in Kiwi dollar. Haven't taken any positions on this. On the rally since the breakout that we spoke about yesterday. A little bit kind of burnt about it because I do want to be in the position, but use caution here. Use caution here. You have the NFP print on tap tomorrow morning. If you do get a spike near 73.70, I do think it might be an offer for an opportunity just for a near-term type of scalp to the downside. But to get bearish here, guys, you'd have to get back below 72 again. I know it's a ways away from where we are right now, but it's a pretty strong breakout. It's a pretty strong breakout. And the thing that's also very interesting is that as opposed to Kiwi dollar, okay, or excuse me, Kiwi dollar, here's what we looked like before Tuesday's release, is in a very different position from where we see Kiwi Yen. I'll show you that in a moment. So there's that clear-cut key resistance. Boom, 72.54 got taken out. Boom, 72.95 got taken out. We're kind of struggling right there. You had a soft target up at 73.30 that we were talking about. But the long and short of it is Kiwi Yen is right at resistance. And that hasn't broken the weekly opening range high yet. So which one of these is lying and which one may be ready for a little bit more of a meaningful setback? I don't know. I think if you want to play the short side of Kiwi, I think Kiwi Yen is probably the better play. Here's what Kiwi Yen looked like earlier in the week. Bullish invalidation was 74.37. Key resistance, 75.52. I know we were talking about this, I think, with Mike, right, earlier in the session. Here's what it looks like on the intraday chart. That key resistance still in play. So despite all the volatility and the rally that you've seen in the Kiwi, still broadly holding its initial weekly opening range. We're pushing that threshold now. If we get past through this, I'd be looking for a follow through here in a rally back into the median line, back in the 76.06 and subsequent topside targets. But as it stands, you're still testing resistance. In fact, give me 1 sec. I just want to see what this extension looks like. Okay. Oh, nice. Okay. So the highs? Oh, this is sweet. The highs from September, that you see right here at this 100% extension, 76.06. Well, if you take 100% extension, or 1618, excuse me, from the advance off the lows from late last month, or the monthly low rather for September, the initial range high for October, range low for October for the opening range, the 1618 comes in right along basic slope resistance dating back to the highs that we made in February for this year. Boom, boom, boom. So on a subsequent topside break here, Mike, if it does stop you out here on this 75.52 run, you got a 50 pip run to the upside for a possible target here in Kiwi Yen. Again, from a trading standpoint, near term, I'm not really looking to touch this. Like I said, this is a resistance target. I would like to be short off this if we get a decent trigger into the momentum in U.S. Open, but you're really tight here against the stop, so might be worth a nice little stab as we head into the open. Hey, Mike, you're more than welcome, man. At the end, if you have time, can you look at SPX, expecting 2056? Sure, Conwall. We are running low on time. Let me get moving here then. So that is Kiwi dollar and Kiwi yen. Any questions on any of the Kiwi crosses? I do want to make sure we cover everything dollar-based before the non-farm payroll tomorrow. 75.52 still resistance in my notes on Kiwi yen. That was number 8, Kiwi yen number 9. Dollar yen number 10. Dollar yen coming into a big area. Here's what dollar yen looks like right now on the live chart. Here's what it looked like earlier in the week. Okay, so for the dollar yen's part, look, the reversal off the May low had some nice momentum sort of profile, had a nice momentum profile with it, and it suggested that we were looking for a move lower. As we discussed early this week, 102.80 was a real sweet level. You had the 100-day moving average that you see here in blue. You had the lower median line parallel extending off the lows from September, and you have a basic 50% retracement of the September rally. So here we are. Okay, nice little initial rebound off that level. Where's near-term resistance? Former support at that upper parallel. That really what capped the advance today. On the intraday chart, super duper clean. That run to the downside that you got an overnight trade actually ran a little bit deeper than I expected it to. 102.80 was where I wanted to see the hole. You did see a probe as deep as 102.54 or so. But in comparison to what we were looking for earlier in the week, okay, it ended up that this formation here, this pitchfork that we added, has been pretty fruitful. Okay, targets at 103.44, 102.80. That's basically what we rebounded an overnight trade. Instant resistance or immediate resistance right back up here now. 103.45 into that confluence zone at 103.58, let's call it, as near-term resistance here in dollar yen. But levels are super clean. Levels are super clean. I do think you can get a little bit more of a rally here. You stay bearish below the median line near term if this is a more concrete high. But 102.80 still going to be the barrier of support. I don't want to take any short exposure past that unless that gives way. And then you'd be looking to sell rallies again, targeting 102.16 and 101.25. Any questions on dollar yen? Which is why this yen weakness, right, on the dollar yen upside here, that's yen weakness, could give us that Kiwi yen breakout. So just be careful on that Kiwi yen. as we head into that resistance region. Any questions on dollar yen? It was number 10. Again, really nice performance. Levels look pretty good. No change from earlier in the week on the update from the 1st. Would you think we can take a short on dollar yen? If we get into 103.45, I want to look for short triggers there, this region right here. But to be quite frank with you, heading into non-farm payrolls, I don't necessarily want to take a long yen position just yet. Here's what the expectations look for. I guess we should go over this real quick. Heading into the U.S. non-farm payroll print, what's interesting is that we did get a weaker than expected print on ADP yesterday, but there was a nice upward revision to the previous month, foreshadowing maybe what we're going to see tomorrow. I don't know. A couple of things to note. Obviously, today on the docket, before we close out the session in the U.S., you do get ISM non-manufacturing composite. That's for the month of October, and durable goods orders. Okay, so keep that in mind as we head into the 10 o'clock hour here in New York. Non-farm payrolls for tomorrow are expected to come in at 175. Look for any revisions to the previous print from 156, and obviously, nice uptick that we saw last month in the participation rate. We'll look to see if that holds at 62.9%. Remember, participation rate largely has been a main issue the Fed has continued to show concerns about, and as participation rate contracts, obviously that'll tend to put artificial downside pressure on the unemployment rate. So we want to see that hold at 62.9. Unemployment is expected to downtick to 4.9% from 5%. All right. Hey, Graham, did you have any specific questions on dollar yen? I just saw your comment there. Okay. All right, so that is dollar yen. Real quick, I do have to touch base on the Aussie and the Aussie yen for you guys who asked earlier. Here's what Aussie dollar looks like. Like I said earlier in the session, you do get the release of the RBA monetary policy report later today. We're going to get the new updated quarterly forecast, guys. Philip Lowe, has said that the forecasts are largely going to remain, or the outlook for the economy largely remains unchanged. Obviously, the RBA interest rate decision earlier in the week did prompt some strength here in the Aussie. We'll look to see if there's anything to follow up, but I'm not really expecting any new releases. It's just that these quarterly projections do have the propensity to really move the market tonight. So watch for that release from the RBA. Look, you're coming up on the resistance at 76.70. The slope here that we've been working with, getting kind of messy. You know what I mean? I don't know what to do with this. It's respecting our lateral resistance, but the slope is getting kind of messy despite the fact that we had some really nice touches off this. So for me, I think for the Aussie dollar, you still want to see a break of the initial weekly opening range on that Monday, Tuesday stretch, which we never got. Here's what it looks like on the daily chart. Again, flirting with basic trendline resistance here. We did see that one-day breakthrough failure. I don't know what to do with that. You're at resistance, okay? Graham, on a stronger dollar story, I think a setback in Aussie dollar would be the breakout. So on a stronger dollar story, I think this would be a nice pullback in tomorrow's trade session. Specifically, if you see a rally, you're at resistance here. It's the weekly opening range high. Your stop would be against the August high day close on a spike, and you'd be looking for a move basically into these lower parallels. If the dollar completely sells off, the breakout above in Aussie still needs to clear this godforsaken region between 77.35 and 77.56. It's such a critical region that we failed at multiple times. So from the Aussies part, you're at near-term resistance. Critical resistance still needs a break of 77.50. The broader uptrend is still in play. I love the broader uptrend in Aussie. It's just you're at near-term resistance. Testing my patience once again, says Wes. Yeah, me too, man. Me too. The levels haven't changed. So again, from earlier in the week, you're basically playing the same setup. Here's the Aussie dollar update and all the Aussie crosses and Aussie yen ahead of the RBA. So the levels haven't changed. You're sitting at resistance right here. We had an upside bias to start off the week well above 75.50. That has been raised. Your bullish invalidation now raised to the monthly open, and that's basically 76. Okay, that's your near-term bullish invalidation. Checking resistance right now. Any questions on Aussie Yen? Or excuse me, Aussie dollar? Coming up on Aussie Yen really quick for another Yen cross. Here's what Aussie Yen looks like coming into a little bit more of a critical area of support. This setup was even cleaner and the cleanest of the Aussie crosses all week long. Here's what it looked like to start off the week. We were coming off of a major structural resistance rebound last week. We talked about 80.36, 80.32. And even this start of this week on the RBA, failure to hold above that level and then a subsequent break below the median line here shifted the focus lower. We were looking for 79.13 and 78.22. 78.22. Oh, this is an adjustment because we had the new high. I'm sorry. So 78.72 is what we just tagged right here. Okay, so we took out both those downside targets. This is structural support. This is a basic 38.2 retracement. Again, let me take that to the new high. Okay, key support right now. And a break lower, you're looking for 73.80, 77.56. Now, those are the break targets. I think this holds near term, and I think this rebound possibly takes you back into former lateral or formal slope support, now resistance, maybe even as high back at those swing lows, the 50 of that range from last week. Let me readjust that actually. That's going to be null and void. Let's do this. Whoops. There we go. Near-term resistance. Boom. Okay, so those are the levels I'd be looking at here for Aussie Yen to heading into the RBA tonight. That's sort of a major key area of near-term support. On a downside break, you'd look for the subsequent downside targets, but look for resistance on this rally heading to 79.38, 79.40. Bearish invalidation, what would shift our broader focus higher, would still need to be a break above that key region we filled out last week. Questions on Aussie Yen? Can you take a look at Aussie Yen? Steve, Merrick, that was for you, my man. Any questions specifically on the Aussie Yen before we move off? Going once, going twice. Okay, let's jump into the remainder of your questions. Graham says Aussie Kiwi exhausted unless Kiwi goes through resistance. I haven't even looked at Aussie Kiwi in quite some time. Let's take a look. Yeah, Eileen, are you in the room? Remember this trade? Oh boy, same slope, offered the turn. Finally last month, we did get the pullback. It looks like you may be coming into an interesting area of structural support here. Oh, wow. There's the 1618. Sometimes you just get an eye for these things, guys, right there. Yeah, look for some near-term support at 104.70, 104.71. Really nice. That's actually a slope extending off the 2015 lows, and then you have a 1618 extension from the decline off the highs. I bet you it's not too far off from the 618, a little bit lower. Key areas of interest here for support on this move lower in Aussie Key. Not bad. Not bad. Hey, Graham, that's what I'd be looking at. I'm sorry, who is this question for? Yeah, Graham, Aussie Key. That's what I'll be looking at, man. You've sparked my interest on this. Yeah, you would need to see some real, the Kiwi really start to give way. What specifically we'll be watching for NFPs tomorrow, Eileen? Many thanks, says Graham. You're more than welcome. So for all the dollar crosses, obviously, are on the menu. Specifically for tomorrow, Eileen, dollar yen will be of particular interest. Guys, we didn't get time to go through euro dollar, so let me just touch base on these real quick. We got this was 11, 12. We went over Aussie Kiwi was number 13. Number 14 here is euro dollar. Okay, so here's what the euro looks like on the daily chart. By the way, the euro levels, again, from earlier in the week are right on point. I don't think we have to change anything from this. Yeah, we did update the targets. I'll give you the updated euro chart, but here it is, guys, tonight. Really clean. Really clean. 110.47, 110.66, the level of resistance that we needed to get through. The rally went right into our soft target at 111.23. If you guys recall, that was just a really nice pivot in price that we highlighted yesterday. Right back at near-term support here on a trigger break. So very, very clean price action in the euro dollar. Broadly speaking, you got to stay constructive above the monthly open, basic trendline support. A basic 236. Also all coincide basically at 109.72 into like 109.80. This is your bullish invalidation level, okay? But near term, you're still looking for constructive price action while above this. Topside resistance 111.70 is the bigger area I'm looking at. That's a key 618 retracement of the decline from the highs that you made back in August. So levels for euro dollar still pretty good. Here's what it looks like on the daily chart. Okay, you're looking for a minor setback here, but real nice strong rebound off the yearly open, confluence support. Although I still think you can get a bigger setback, you're looking for a pullback to buy in euro. Any questions on euro? Big level for resistance, 111.70, 111.70. I know that the swing trades on the swing side of things, guys, we're long, targeting 111.75. So we'll see if we can't get that that stretch into that 618. Again, not only do you have that 618 retracement, but you also have the 200-day moving average exactly at 111.75 today. And just above that, parallel resistance. So big regions, big key area of resistance here for the euro dollar. Wes says, my pound short's doing well. Thanks. Hey, don't have to thank me, man. I'm only here to, it's your trade setup. I'm only here to point you in the right direction. Any chance of a quick look at euro pound? Sure, D. I was looking at this. I saw your comment, I think, earlier before the session started. Here's what I'm looking at. Good morning. I'm back on, well, first of all, welcome back, D. It's great to see you. I'm back from the jungle in Africa, and the world has changed. Need to see pound today. Please, I got stopped out of my euro pound shorts that I had been before I went on vacation on the 19th of October. Yeah, 91.91. You saw that stretch above. This is a long dated 786 retracement that dates all the way back to the highs that we made in 2000, I want to say. 2008, excuse me. 8 years off. What am I saying? But we did come right off that. Here's the pullback. Look, I really don't have anything concrete support until down here. I had a soft target at 88.15, but we flew right past that. You know, I'm not really a big trader of euro pound. In fact, it's something I never trade. Why? Because the pip value obviously is more. You're working with pound pips, and with the same respect, the ATR is very tight, so you don't get the range, and at the same time, your pip value is much higher. So euro pound is never a trade that I'm really involved in on an intraday or a near-term basis. What I'm looking at here is the possibility of this being a bull flag. If so, you'd still want to stay basically constructive above this region. And you're looking for a topside break above 91.90 for a larger long-term target here at 94.65. That's a 1618 extension from the advance off the lows from 2015. So, you know, take it for what it's worth. You know, I don't really have a play here that's sort of that excites me per se, but It looks like on near-term price action. Same type of gig. Bullish invalidation, 87.10. Yeah, I'd stretch it into 86.65. D, this region right here. Okay, so what this is, this 200%, just for your reference, is it's just a measured move of this range. See that range? Which is even a conservative move. We can actually even probably choke that up to here. Let me re-amend that to this region. So simple breakout range would give you a measured move of that low down into like 87.40. That's 618, 87.10. Both of those converge basically like later next week. What am I saying? Still witter off. This is a 4-hour chart. You still got a long time before that converges on any type of structural support near term. This might be the trajectory. If that is, gives you much more of a cleaner near-term target, basically down here. Near-term bearish invalidation, D, up here. All right. Does that make sense? Interesting pair. Again, really tight, way too tight for my liking, but I think you're getting a little bit of some clarity on the structure there. That 50 line holding that pretty well. Looks pretty decent. D says, yes, thanks. Hey, you're more than welcome. Did I cover everything? I got everyone. We are way over on time. So I'm going to wish everyone best of luck trading the NFP tomorrow. Quick look at dollar CAD, guys, because we did cover crude. Look, this thing, I don't want to touch it. I got no interest in it, but the daily chart has continued to teeter near these highs. Look at this structure for what it's worth. If you do see a major turnover in the dollar, it might be a nice candidate, specifically as we continue to hold near multi-month highs with really inability of momentum to do anything constructive up here. So something to take note of. Not my favorite play for tomorrow. Dollar yen will be the focus for me as we come into this area of near-term support. We'll see if that 102.80 level gives out or holds. Euro dollar, also an area of interest. If we get a pullback on a weak dollar story, I'd love to be long more so on the euro side of things. And Aussie dollar obviously holding at resistance on a strong dollar story might be a nice pullback play. We'll keep you updated on the SB Squawk. Keep in mind, a quick reminder for everyone here in the room, Jamie's midweek strategy webinar is still scheduled for today at 1 p.m. So get a nice update from Jamie on his levels as we head into non-farm payrolls tomorrow. Want to wish everyone best of luck trading, a great weekend, and I'll see you on Monday. Cheers, guys.